what's going on, interweb? It's Mike Mills with Verity Mortgage coming to you again today with more information on mortgages and what is available to you. So we're talking about VA loans today. Can and should you get a VA loan? Question number one is, did you serve in any branch of the armed forces? If the answer to that question is no, then you can swipe over to the next TikTok and move on. So first off, a big shout out to all my servicemen and women out there. We thank you so much for your sacrifice and service. We want you on that wall and we need you on that wall.
You snotty little bastard.
So first off, let me say that if you're eligible for a VA loan, it is hands down the best loan that you can get. But a quick note on this. The VA doesn't actually issue loans, okay? The VA is not a bank. What the VA is it's a department of the government that insures loans for banks. So that allows for us as lenders, as long as we write the loans to VA standards, it gives us an insurance policy that for some reason, if you don't pay your mortgage, the VA comes in, buys that loan and sells it on the secondary market. So what that allows for lenders to do is give a little bit looser restrictions, credit scores, debt to income ratios, so we can open up the opportunity to buy a home for someone that otherwise couldn't with a different loan program. So people ask me, Mike, why are VA loans the Tom Brady of loans? Well, a couple of reasons. Number one, 0% down. You don't need any money to put down on the house. Number two, with no money down, you don't pay any mortgage insurance. So FHA, conventional loans, USDA loans always have that extra fee if not having 20% to put down. Also, you're allowed to purchase a little bit more than typically otherwise. VA loans use residual income to factor your debt to income ratio. So that means that your debt to income ratio can be a little bit higher on a VA loan and you can still qualify. Also, because it's federally insured by the VA, it comes with super low rates. So even sometimes compared to conventional loans and other types, you're going to get a great rate also. And the last thing is ultimately, if you have some issues on your credit, a little bit lower credit scores, you had credit issues in the past, bankruptcies, foreclosures, things of that nature, it's a lot more forgiving than say a conventional loan, which means that you can bounce back quicker from financial issues that you've had in the past and still qualify to buy a house. So it can't all be sunshine and roses, right? There are a few things with VA loans that are what I would call minor drawbacks. Number one is you're going to have to pay a funding fee. Now, you don't have to pay that money out of pocket. The way it works is we take your loan, say it's $100,000, and let's say your funding fee is $2,000. So your loan now is $102,000 as opposed to just $100,000. You do have to pay the funding fee, but you don't pay it out of pocket up front. That funding fee gets paid when you either sell the house or pay it off. The second thing is that appraisals, or I should say appraisers that do VA loans specifically come from the VA. So that means VA has specific appraisers that they send out to do VA appraisals. Now, I will tell you, some in the real estate world look at VA appraisers like they're going to be a little bit harder on the property than say a conventional or other type of loan. I personally don't think that this is accurate. I think that VA loans, or I should say VA appraisers, are just as likely to get you the value that you would with an FHA or any other type of what we would call federally insured government loan. So even though that occasionally you can have issues with appraisals, they sometimes take a little bit longer. I don't think that the stigma that's being held is kind of an old idea. I think that VA appraisers and VA appraisals are just as good as a conventional or any other type. So how do you know if you're eligible for a VA loan? Well, first thing you need to do is get a copy of your DD-214. This is a certificate of release and discharge from the military. Then you'll take that form and you'll submit it to the VA and you'll get your certificate of eligibility, or COE. This tells you how much eligibility you have. It can vary depending on your time of service, depending on what department you were in, if you were reservist or full-time active military. So all of these things play a role. So once you send this form off to the VA, you'll get your certificate of eligibility back and poof, it's just that easy. Now, I say it's just that easy, but you are dealing with a government entity in the VA, so, you know. So the long and the short of it is if you can get a VA loan, you absolutely should. Again, I cannot say how much I appreciate each and every one of you, and I personally sleep better at night knowing that you got our six. You've sacrificed and given yourself for the protection of this nation, and you should take advantage of this small perk for your time served. Thanks again for your time, guys. If y'all have any questions, please comment below, forward and share this video to your friends if you can. This is Mike Mills from Verity Mortgage again, telling you to be good humans, and we'll see you soon.